know what the problem is. Talk.
How about now?
No, I'm not changing anything on this. One second. I'm gonna see if it comes up here.
Okay.
Okay, everybody. I got a special guest today, Joel Penturo. Joel, can we get a microphone check?
Yeah. Hello, hello.
Okay, I have you here. I just can't hear you through my computer here, so
Okay.
I'll just have to kind of do a little double take here. So and there's also a little delay because we're not doing it direct. So let's go ahead and do this. Let me see here. Yeah, it's funny how technology works like that, right, man?
You gotta love it, man.
So, ladies and gentlemen, I have Joel Penduro here. He is a very good friend of mine, a local lender. And if you've been looking at some of my live streams, I've talked about the interest rates and everything. So I've brought Joel on here just so he can talk about what's going on because things are getting really kind of strange right now with interest rates, and it's really going to start affecting people. It's starting to affect people already. So just on cognizant of Joel's time, I'll let him start off, and we're going to let him talk a bit about what's going on with the interest rates and everything. And Joel, I'm going to see if I can make you number one here. No. Oops. Okay, I guess we have to share the screen. So Joel, take it away and tell us what you know about what's going on with interest rates.
Yeah, no, thanks for having me, Eric. I appreciate it. So yeah, I mean that's the seems to be the topic of interest with everybody, saying that the interest rates have just gone up. What has going on? Like, a lot of individuals we got spoiled with the twos and threes last year, 2 years ago, for the past 2 years, and so forth. That now when we're looking to buy a home and we see someone pre-approve us and the rate in the fours, fives, so we're starting to see some sixes. A lot of individuals are like, "Whoa, what's going on here? I don't want to buy anywhere. The rates are just taking off." And yeah, I mean the rates are rising. I mean, we couldn't expect them to stay at 2-3%. I mean, that's technically free money. Investors got to make their money some way, shape, or form. So rates are definitely going up, and a lot of people are like, "Well, what's driving the interest rates up?" It's inflation, folks. That's what it comes down to. I mean, your dollar can only go so far, and if you put yourself in the shoes of that of an investor, I mean, when you go and pump gas, I mean, we're seeing at the gas station with the gas prices. If you put yourself in the shoes of an investor and you're going to be lending someone money to buy a home, and your dollar can only go so far, are you really going to be charging a 2 or 3% interest rate? I mean, eventually you got to charge the interest rate high enough to keep up with inflation. Now that's what we're seeing. I mean, rates are definitely going up. A lot of people that have been waiting and waiting and waiting and continue to wait till this day. I mean, they're just getting priced out of the market. To be honest with you, a lot of individuals that were pre-approved in the 2-3%, they wanted the rates to go even lower, and they're still waiting for rates to go back down. And it's kind of like the rates are just going to continue to increase. Of course, we don't know what's going to happen, but if we look at history, I mean, with inflation comes recession, and we're going to be hitting a recession pretty here soon, and the rates are just going to continue to go up. And a lot of people are like, "Well, I don't want to pay a mortgage at a 6% interest rate." But when you stop and think of it, okay, you're renting right now. What rate are you really paying? You're paying 100% interest on it. So when someone gives you a mortgage to buy your own home at a 5%, pretty soon at a 6%, possibly even 7% at the end of the year, we can't really be like, okay, well, I mean, I don't want a 6% mortgage. Well, you will have a 100% interest, pure interest, on your current rent right now. Um, Now, keep in mind that unemployment, yeah, it's at the lowest right now. The feds are increasing the interest rate to help keep up with inflation. And usually, when unemployment is at the lowest, I mean, when something's at the lowest, what can happen? It can only go up from here. So we're gonna start. The economy's gonna start seeing something that we haven't seen in quite a while, which is unemployment. In my opinion, is gonna be rising in the near future. And what's gonna happen is that I mean, the rates are going to go up as well with it, but it's going to be very interesting, Eric. I mean, it's just overwhelming amount of info that I can give you guys. I just don't want to sit here and bore you guys with stats, but just know that inflation's here, a recession's coming, interest rates are going to continue to increase. But when we hear recession, a lot of people always confuse recession with that of a housing market crash. Completely, completely different. I mean, if you take a look at 8 of the last 9 recessions that have occurred, housing has done extremely, extremely well. And this is where individuals definitely build that wealth because they don't sit back and wait for the housing bubble to crash. That's what everybody's waiting for. And is that going to happen? No, it's not going to happen. Are we ever going to see it again? Who knows? But I can guarantee, not guarantee you, but I can most certainly tell you with confidence that the housing market is not going to crash. We're going to see recession, but a recession in the housing market is completely, completely different, completely separate. Rates are rising, and I mean, if you're thinking about buying, now is the time. It's always been a good time. I always tell folks, you're paying rent right now, where your landlord can raise your rent by a couple $100 every single year, and we're seeing it affect individuals tremendously. But right now, if you can still lock in an interest rate, I mean, and if you get an interest rate in the fives or even the six, it's still a really darn good rate compared to the 100% interest rate that you're getting right now on your rent. So we just got to stop and think that, yeah, rates are rising, but that shouldn't discourage me from buying a home. Now, we do have a lot of people that were pre-approved earlier in the year, and early in the year the rates were low. They were, compared to that of last year, they were still low early in the year, but just recently, within the last couple months, rates have just taken off, and they're going to continue taking off. So my advice is to those individuals that were pre-approved earlier in the year, definitely check with your lender to make sure that the numbers still work. And what I'm always advising individuals is that whatever rate you're getting quoted right now at the pre-approval stage, keep in mind you're getting pre-approved right now, so you haven't found a home just yet. While you go out and go home shopping, do yourself a favor and ask your lender, okay, what rate am I? Let's say I'm going to contract right now. What rate are you going to give me? And let's say you're going to get a 5% interest rate. Have the lender give you numbers at a 5.5 or even a 6% interest rate just to prepare you for worst case scenario. That way, when the time comes that you do find a home, you're not shocked by the interest rate that he's going to be or she's going to be quoting you at that time. So it's very interesting, Eric. It's a lot of good stuff, a lot of info. Rates are rising. Stop waiting, and let's get into a home.
Okay, so here's one I want to ask. I'm going to show this graphic here that you sent me on Friday. I want you to speak to it a bit.
Yeah.
Oh,
So the way that Eric and I, the way that we work, I mean, we're completely transparent, right? I mean, I'm the individual that's not going to give you a rate that you want to see. I don't want to go ahead and paint the picture pretty. I'm going to tell to you how it is. So whenever you're looking at interest rates, especially those that we're so quick to Google what's today's mortgage interest rate, and you go online and you find a mortgage rate of 4.5%, and then you call Joe myself and I tell you, you know what, it's actually 5.75. But let me show you how we can get it down to the 4.5. That's called buying down discount points. So what you're seeing here in the screen, those are mortgage rates without buying down the rate, and I'll explain to that what that means shortly. But as you can look at it, I mean, looking at the rates, you're looking at 5.7, 5.6, even this 6% nowadays. Now, a lot of folks are like, whoa, I don't want to pay 6%. Again, guys, I mean, if you're renting right now, you're paying 100%. So 6% actually doesn't seem that bad. It's still a 94% discount, if you ask me. But rates are going up. I mean, look at the VA rates. You're looking at it 5.625. If you have spectacular credit 780 plus, you're looking at a low fives. And keep in mind, folks, that these rates, they're fixed for the life for 30 years. So let's say you go ahead and lock that home in now at a 5.375 for 30 years. If rates go back down in the near future, 2, 3, 4, 5 years down the road, you can always refinance. But what you cannot do is gain that equity that you missed out on by waiting till the rates go back down. So buy now, lock in that interest rate, and then go ahead and refinance down the road. And this is a good technique, Eric, that a lot of individuals, I myself didn't think about until I got into the industry, is you might get a payment quoted at the 5.375. You lock in, you close on that home, and then down the road, you go ahead and refinance. It's like, well, my payment's going to drop $500. What I'm encouraging individuals to do is like, yeah, your payment might drop down the road, but if you're smart, you can still continue making that payment that was higher and just pay off your home that much quicker. So something to think about. But yeah, I mean, if you look at the chart, you've seen rates in the fives, even in the 6%.
Okay. And what really drove some of this was when you're talking about at some point you're seeing that most of these rates are going to be 6% this year. What are you really seeing out there, and what's coming out of the MBA Mortgage Bankers Association?
Yeah, so a lot of people are forecasting that by the end of the year we're gonna. So a lot of studies are being done, right? A lot of economists will go ahead and tell you this is the rate that we're going to be seeing. Early in the year, a lot of folks were saying we're going to see rates in the 5% by the end of the year. Well, I mean, we're in end of April. We're already seeing rates in the 5%. So now economists are predicting to see rates possibly in the sevens and so forth. So it's definitely going to go up there. We're not seeing economists predict that the rates are going to go back down to the 2 or 3% for sure.
Okay. Now, like speaking to somebody who's a layman, and they were going like, okay, rates were at like the low threes at the beginning of the year.
Yeah.
So now that they're at 5.5 and above, actually 5.6 and above. How does that affect their mortgage payment?
Yeah, so if early in the year you were pre-approved and you were pre-approved, like Eric said, in the low threes, you might want to go ahead and revisit with that lender. Here's the reason why. If that lender pre-approved you for 350,000, that was your absolute max. Now, looking at the rates that have gone up pretty rapidly, that 350,000 that you were pre-approved to can turn down to 300 even lower pretty quickly. So the way that it's affecting individuals is their purchasing power has definitely diminished with the increase in rates. And this is where we really got to sit down and advise properly. Because, yeah, the rates have gone up, which means that you're qualifying for a lot less now. But there's still ways that you can still qualify to what you were qualified for previously, whether it be by paying off some debt or by structuring the loan properly. So to answer your question, is definitely got to sit down and talk some strategies to see how it is that we can still get you approved for what you were approved for when you had the low three interest rates.
Okay. What I was really hinting at is like, I know it reduces purchasing power, but like, let's say we used a hypothetical $400,000 house, and we went from that 3.25 to this 5.5 or so. How much more of the payment average?
How actually let me do the math real quick for you. So let's say at a 400,000, you get a 3.25. Your principal and interest payment is 1709, and now you're looking at a let's say 5.6. Now you're looking at 2260. So about $500 difference in mortgage payment.
Okay, so $500, and that's just from the interest that's changed since the beginning of the year. And that
Yeah.
doesn't include the fact that that $400,000 house is now a $440,000 house.
Yeah. It's interesting, man. I mean, a lot of individuals that were out there looking for our first home. It's this is where I think yourself, along with me, differentiate ourselves. Is we really got to advise individuals as far as where they stand, what they can afford, and just being realistic with it. You know?
Okay. Uh, Now, you talked earlier about teaser rates that some lenders will put out there, saying things like we have a mortgage for 4.5% or something. I mean, I get these mails all the time. When you actually call, there's some kind of a buy down. Can you explain that buy down to people?
Yeah. So the way that it works, it's and I'm not a big fan of those teaser rates to be honest with you. Just be honest to me what my rate is, and that's it. You know. But to answer your question, Eric, so you'll get the mailer. It says get a 30-year fix for let's throw a rate out there 4.5. Wow. Okay. Well, when you're looking at a 5.6 and a 4.5, yeah, that's a huge chunk difference. But what you want to do is you really want to look all the way down of the mailer and look at the fine print. It's going to say on there, this is what the 780 FICO score, putting 20% down and buying 2 discount points or 1 discount point. What they mean by those discount points is a certain percentage that the lender is going to charge you to give you that rate. Now, is it worth it? Is it not worth it? That's really going to be determined by how long you plan on staying on the property. So yeah, you pay a couple thousand to go ahead and get that interest rate. Is it worth it or not? It depends on everybody's situation. So just be
Okay.
very, very cautious, especially as the year progresses.
Okay. So really, it's going to be about the payback time, kind of like people who
Yeah.
say, okay, gas prices have gone up. I'm going to go buy a Tesla or something.
Mhm.
I mean, yeah, what's your payback? How long is it going to take you to recoup your money if you ever do?
Exactly. That's something we definitely got to pay attention to. Definitely got to pay attention to. And that's one
Okay.
thing that we really break down is like, okay, yeah, you might be shocked by seeing a rate in the 5.5 when someone else is teasing you at a rate of 4.5. It's like, yeah, the 4.5 looks great, but it's going to take me about, and I haven't done the math, so don't quote me on it. It's gonna take me 5, 7 years to pay it back. It's like, hold on, so I'm gonna pay 5,000 to get this rate, and then quote me on the figures because every scenario is different. But I'm gonna pay 5,000 to save myself $20 a month, but I'm only gonna stay in the home for 3 years. It's kind of like, well, is it really worth it or not? So it's not always about the rate; it's also everybody's situation, you know.
Okay. Okay. Now, I think we've covered most of the stuff on interest. Let's talk about some of the impact that you've seen. Now, based on how quickly these have gone up, have you seen any buyers that have actually been personally affected by this so far?
I have, and I've seen quite a bit. But when I see the way that they've been affected, we've always been able to find a solution for it. The way that it works out is like, okay, yeah, the rate went up, but what I'm finding out is that individuals are still motivated. I have some clients that are still motivated to buy a home because they understand the importance of accumulating wealth. And what I'm seeing is a lot of family is willing to help out those individuals to help them still achieve the dream of home ownership. So I personally have seen some individuals be affected by it because I think everybody in the industry knew that rates were going to go up, but none of us anticipated them going up so quickly as they did. So what we're doing now, my team and I, is when we pre-approve somebody, we'll give them, of course, what the rate is at right now, and then just to be cautious in the safe side, and I think everybody should be doing this, is we're pre-approving and preparing individuals for a higher interest rate from when that time comes. Now, there's a lot of programs out there that I'm starting to see advertised as far as locking your rate now and go out and shop for a home and so forth. But yeah, I mean, you got to read into the fine line as well.
Okay, good. Now I'm going to open this up for questions while I ask Joel a few questions about lending. Because even though I've stayed at a Holiday Inn Express, I'm not an expert. Now that I have an expert on, let's talk about some really good stuff here. So, uh, like your VA loan is really great.
Yeah,
Now, you do not charge any points.
no
I mean, I'm sorry, no origination,
lending fees.
no points. You don't even charge any fees for your VA, which saves the average VA buyer about how much?
About $1,500 just right off the bat.
That's it.
And a
I
lot of
mean,
people are like, hold on here, you're not charging any lending fees? It's like, no. So the way that it works out is, of course, the VA, it's 100% financing, meaning no money down to buy the home, but you still have closing costs that are involved. And those closing costs pretty much break down to prepaid items from your taxes, your insurance, escrow, title, and lending fees. The lending fees is what I can control and my company can control. And the lending fees is something that we waive on all of our VA loans, which right off the bat saves a average veteran about $1,500.
but that's just on lending fees.
That's exactly.
Some of these big banks charge that origination fee, which is 1% of the loan, which right now that's $4,500. So
Yeah.
you're actually talking somebody who's buying a $450,000 loan from a bank and they don't have a cap on the origination fees. You're talking about saving them $6,000, right?
Yeah, a lot of money, man.
Yeah.
And I get asked a lot. So what's the catch? It's like, okay, you're not gonna charge me a lending fee, but you're gonna charge me a bunch of discount point. It's like, no, 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 no. There's no lending fee. Discount point is completely optional. If you want to buy down the rate, more than welcome to do so. But yeah, a lot of other lenders out there will promote the same thing, no lending fees, but then go and charge it into an origination fee and so forth. But no, I just don't. It's the least we can do for our veterans, you know.
Excellent. Thank you. Now, here's one that I have a lot of trouble with veterans. Some of them believe that the VA loan is a completely free loan. You know, no down payment, no closing costs. I have no idea where that came from,
Mm.
but just to clear it up for the veterans who keep thinking that they don't have closing costs. Correct me if I'm incorrect. We know what's going to happen here. There are closing costs for a VA loan, correct?
Correct. There are closing costs. Yeah, there are closing costs, and yeah, a lot of individuals do promote that no money down. But again, redefine putting the money down as far as the down payment, but closing costs are still applicable.
Yeah. And the only thing that they really can't, and a lot of them believe that, oh, yeah, they're closing costs, but I'm allowed to roll that into the loan. I have no idea where that one came from.
Oh,
Do you even have an idea where that one came
so
from?
yeah, so the way that it came about, uh, even it came about in the past 2 years. Has been promoted tremendously because the rates were extremely low. So the way that it works out, it's those individuals that have gotten the idea where, yeah, they're closing costs, but they can be rolled into the loan. So the way that it works out is whenever you select the interest rate with your lender, they're going to give you the rate as what it is without buying it down. You can pay some money to get a lower interest rate, or you can elect to get an even higher interest rate and get a lender credit within hopes that the lender credit covers all of your closing costs. That's where that idea came from. Now, whether it's explained like that or not, different story. But to answer your question, higher interest rate will give you a lender credit to compensate for the closing costs. Am I
Okay.
seeing that nowadays? Not with the rates going up the way they've been going up.
Okay. I mean, that's maybe where it came from. Some of
Yeah,
these guys out there are rolling it in purely because they were paying for it because they were charging higher interest
yeah,
rates.
exactly,
Okay.
exactly,
Okay.
exactly.
Cool. Now let's talk about. It's almost becoming the redheaded stepchild right now because not too many sellers are actually accepting them. FHA loans. Can you explain the FHA loan a little bit?
Yeah, so there's a lot of different loans out there. The most common are that of the FHA loan. You have your conventional loan, and then you have your VA loan, and then you have your USDA loan. We don't see a lot of USDA here in the Valley. We mainly see the FHA, conventional, and VA. Uh, FHA, the easiest loan to qualify for. I need is a 580, possibly even lower if we have some compensating factors. And then you have your conventional, which is a little bit more complex to qualify for. Usually requires a larger down payment than that of an FHA loan. Yes. I already know people are going to be watching this like, no, that's not true. You can actually get a conventional loan with a lower down than that of an FHA. And yes, you can if your credit scores is spectacular. And I can explain that as well. But to answer your question, the FHA loan usually the easiest loan to qualify for. So a lot of sellers have that idea that if it's an FHA loan, they don't qualify for any other loan out there. They're barely making it to get a mortgage, which is not necessarily always the case. Sometimes it's a better fit for them. They might not have the strong credit file to get a conventional loan, but even an FHA loan, they're still gonna achieve home ownership. FHA loan 3.5%. Conventional might be possibly lower at a 3% or 5%. But the biggest differentiating factor between those two, as far as if you're gonna get an FHA loan or a conventional, is what's called your mortgage insurance. So anytime you put less than 20% down, you're gonna have what's called MI, mortgage insurance. With an FHA loan, whether you have a 500 FICO or an 800 FICO, that mortgage insurance is calculated the same as opposed to a conventional. The higher the FICO, the lower you pay on the mortgage insurance.
Okay. Now, from what I've seen, there are pretty much four rates for conventional loans out there right now: 3%, 5%, 10, and 20. Now
Right.
we know 20, you don't have any MI. When people are going for like the 3%, I mean, how many people are actually going for that 3% down?
The 3%, what I'm seeing, it's a lot of first time home buyers nowadays. I'm seeing them really, as far as getting the proof of the 3%, usually are those individuals that are buying their first home. Usually, their income is below 60,000, and their credit is up there above 780. Those are the individuals that I'm seeing getting approved for that 3% down conventional.
Okay. I want to touch back to FHA for a second. And this is one people don't think about. There are actually higher closing costs with an FHA, even though some of them can be rolled into the loan. But you do have the MI, which no longer goes away, no matter how long you have that loan. So explain the MI on an FHA loan.
Yeah, so the FHA loan, you have what's called upfront mortgage insurance, which gets rolled into the loan, and then you have your monthly mortgage insurance. So if you put less than 10% down on an FHA loan, you're gonna have that MI for the life of the loan, unless you sell or refinance into a conventional loan. Of course, if you sell, you're not gonna have a mortgage, but if you refinance into conventional, then yes, you get rid of that mortgage insurance.
Okay. Now, you did mention one that's not talked about as much here, but I do know there are some areas here in Clark County and right over the border in Nye for the people in Pahrump,
Yeah,
the USDA loan.
yeah.
Uh, Talk about it briefly in some of the areas here, because I know like like you going out to Blue Diamond, that's uh, some of those qualify as USDA. I believe somebody said at one point some areas of Mountain Edge counted for it. And plus, we have all that building that's going up in Indian Springs by Creech. Go
Yeah.
ahead, talk about it a little bit.
So the USDA, the areas that are closest to here in the valley, you're looking at Pahrump, so down by Blue Diamond, up by Pahrump, that qualifies for USDA financing. Mesquite qualifies for USDA financing, and so does Boulder City, that qualifies for USDA financing. So
Whoa, whoa. Okay,
yeah,
that's the new one for me. You're saying Boulder City qualifies for
yeah,
USDA.
yeah,
So if somebody
yeah,
wants to move there, they can get a zero down loan.
yeah, yeah, yeah.
Okay. How many people take advantage of that?
Of the USDA, not as many as they should. I mean, there's definitely an option out there. A lot of individuals don't take advantage of the USDA loan,
Mm.
but it's definitely an option out there. Just like, for example, with the down payment assistance programs, I mean, you have Home at Last offered by the Nevada Rural Housing Authority, and you have Home is Possible with the Nevada Housing Division. They also offer down payment assistance programs. So those areas that are not covered by USDA can potentially be covered by that of the Home at Last or the Home is Possible.
Okay. Man, you're reading my mind because I know there are people out there who are going to wonder about
Uh,
these down payment assistance programs. Let's go ahead and talk about those for a few minutes.
Yeah, so you have the most common that are used here in the valley. You have your Home at Last program, and then you have your Home is Possible program. But complete transparency, what we're seeing with the increase in interest rates, a lot of options are offer on a day-to-day basis. So you might get a 3%. They give you assistance anywhere from 2, 3, 4, all the way up to 5%. So yes, it can potentially cover all of your closing costs, but just keep in mind that with the market being so volatile, that some of the options that you might be looking at now might not be available in the future.
Okay. So I'm sure you've seen this a lot too. A lot of people come in, they want down payment assistance, but there is a higher threshold for FICO scores. Let's talk about that for a second.
Yeah, yeah. So if you want to get some down payment assistance, it does require a minimum FICO of 640, and that is mid FICO. So of course we have TransUnion, Experian, and Equifax. And what the bank does, we look at the mid FICO, and that mid FICO does have to be at 640. And then there are some options available for those that have a 660 as well. So minimum 640. Now, a lot of people are like, oh, whoa, I need a 640. Okay, I'm out of luck. My Credit Karma says that I'm only at a 620. Please don't believe those apps. It's a good guidance to give you an idea where you stand, but please leave it up to a professional. Where if you're really interested in buying a home, give us a call. We'll be more than glad to help you and advise you on how to achieve the credit score that's needed, whether it be for some down payment assistance programs or to simply qualify for a mortgage.
Okay. That's good information. Now, there is one under Home is Possible or Home is Last. I forget which one. The Hero program for veterans. Can you explain that one a little bit?
Yeah, so the Hero program also gives you some assistance with that of the closing costs. So that can definitely help you pay those closing costs. But they'll keep in mind, though, that every program that's offered out there always has a fine print. Okay, so there's programs out there that will give you some money towards the down payment or towards the closing costs, but it's also very very important to look at those fees that are associated with those programs as well. Because yeah, there's programs out there that can give you a couple thousand, but if they're going to charge a couple thousand to give you that grant, it's kind of like a hold on here. Is it really worth it? It's not worth it, and so forth. So we'll definitely take a look at the fine print, but there's a lot of programs out there. I mean, if anyone's watching interested in any program whatsoever, you can always get a hold of us. Now the programs are changing as the market is changing. So if you're looking at one program now, tomorrow it can be completely different as far as the qualifications or even the program itself if it's even offered. So definitely got to keep those options open.
Okay, before we get too far into this, I have to give you a little props here. Um, Tell us about what company you work for.
I work for a guaranteed rate. That's who I work with. That's who carries all of my business, and really good company. We're pretty smooth. We take pride in our work, no doubt. Definitely passionate as far as what we do, and ultimately we're here to help people go from renters to homeowners. And a lot of people use that the cash phrase, you're not just a loan and blah blah blah. No, trust me, like I actually do care. Like I give about you. Like I take pride in my work.
Okay, good, good. Let's see what else people have questions about. I'm surprised no one has actually asked a question yet. We have a few people on here, but no questions yet.
I think
Uh,
everybody wants to know where the rate's going to end up at the end of the year.
well,
I wish we all knew
I don't
that.
think either one of us has a crystal ball on that one. I
Uh,
honestly did not see them getting this high this fast.
this fast. Yeah, neither did I, and I don't think anyone did. And it came back surprise, but it was just honestly a matter of time. Matter of time. It's here now. We just gotta embrace it. We gotta adapt. And if your dream was to own a home, don't get discouraged by it.
Okay, okay. Let's see here. Now, I know there are special programs out there for different professions, or at least there were. Does the culinary union still have its program?
The Culinary Union offers their program as well. Um, Now they have their own rules and regulations, so I'll let them. I won't speak on their behalf as far as their requirements because they did tend to change quite a bit. But yeah, there's programs out there. I mean, it's ultimately the way that it's marketed. I've seen some individuals market have a nurses program, and then you read the fine print and you look into, you're like, wait, hold on, this is just home at last rewarded differently. This is just home is possible rewarded differently. It's all about the marketing tactic, but that's what we're here for, complete transparency.
Okay. Uh, the next one we'll talk about are some alternate loan products like the doctor's loan. Do you guys do the doctor's loan?
Yeah, we do doctor's loan as well. There's a lot of loans that we do in house to help with young professionals or any professionals at all. Of course, every scenario is differently. So if you're a doctor and you just finish your residency and you're trying to go ahead and buy a home and you're like, well, I have these student loans. I don't know if I can qualify or not. Definitely give us a call. For anybody that's in any profession, don't get discouraged, especially if you have student loans. I mean, those regulations are changing. Those rules and requirements are changing quite a bit. So, anybody that has any loans out there outstanding that they think is preventing them from homeownership, don't let that be the case. Give us a call and let us be the ones to tell you this is what you got to do to make it happen. But yeah, we do have a doctor's loan as well.
Okay. And now here's one that I see a lot. People who want to move into move-in ready homes, and yet everyone wants that move-in ready home, and those are the ones with 30 offers on them. Instead of looking for the slightly busted home that they can fix up. Now, there are programs out there for that, and the main one being the 203K loan from FHA.
Yeah.
You briefly discuss the 203K along with the two types, that and the streamline.
Yeah, so you have your FHA 203K, you have your option A and B. And pretty much what that means is that you're going to go ahead and buy a home, a fixer upper to usually that needs some repairs. And if the seller accepts your offer, you're gonna go ahead and get contractors out there to bid on the projects and those items that you want to go ahead and get fixed, and then we'll go ahead and finance those items as long as we go ahead and get those proper contractor licenses, the contractor's bid, and so forth, and the bank approves it. Then yeah, we'll go ahead and finance that and finance those fixtures that want to be made for it. So it's definitely available out there. Definitely something that's underused. It's just out there. I think any program that's out there that's available is definitely worth looking into, especially those 203K loans.
Okay. And like with the streamline loan, that's 35,000. You're not required to use a general contractor. And I think a lot of people are really missing out on that because you can get a lot of work done for 35,000 bucks.
Yeah, a lot of work done with the 35,000. So of course there's requirements to me, but they're not as strict as the other ones. Definitely doable. Definitely something to explore. So if you're definitely interested, give us a call. We can definitely go into the fine print of it and see if it's a good fit for you.
Okay. Now, I know we briefly discussed this one, and your bank does this one, and not too many do, but there is a $35,000 loan for the VA that they can roll in for home improvements. Since
Yeah.
we discussed that, were you able to do a little more research?
I did some research on it, but not a lot. I mean, it's definitely not something that's promoted enough and not used quite a bit. But that VA loan that you can roll those fixes into it as well is very similar to that of the 203K. It's just that the VA has their own version of it. It's definitely something to explore as well.
Okay. And also one that people don't think about. I don't know if you guys do this one, but the energy efficiency for VA.
Energy efficient. I haven't done one of those myself.
Mm,
Definitely something to read into. But if it's available, more than likely I offer it. I'm just not
mm.
gonna talk about it and be full of myself about it. But I can definitely look into it. But if you're interested in that, I can definitely take good care of you reading to the guidelines. I'm a big mortgage guy. I'm a mortgage nerd. So if I hear about a product like this one, I'm gonna go ahead and write it down right now and then do my research on it before speaking about it. But there's a
Okay.
lot of programs out there, like a lot of programs, a lot of different loans that a lot of individuals are not taking advantage of.
Okay. And I'll just go into it really quick for those who don't know. If you purchase a home with VA, if you make energy efficient improvements, you can actually get those rolled into your loan. So, like if you had an old AC system, it's been hanging on, it's 20 years old, you get a new energy efficiency one, like that's 14 SEER and the old one was 10 SEER, all that stuff. They will actually allow you to do that. All you have to do is prove that you're actually saving a certain amount of money. And it's any energy efficiency. So let's say you moved into a home that's older, that was built in the 70s or 60s or something. It has the panel windows. You can actually go in and get double pane windows because of the huge savings that you're going to have. Or if there's not much insulation, you can put that in. Anything that improves energy efficiency, you can actually apply for that and get that rolled into your loan.
Especially here in the valley. When you say AC, I mean, where I think our weather's about to approach the 90s, it's about to get hot.
Yeah. Yeah. Now, I'm going to talk about the last one that I don't see pretty much anybody utilizing. Uh, Now, I know different banks have different names for it. Some of them call it the lifestyle loan, where it's for a conventional, where you can have 35,000 to kind of do like a 203K um, streamlined. Do you know anything about those?
Lifestyle, I've not heard about that one. Interesting. Something worth looking into for sure.
Yeah. Okay. Hey, I guess I've stumped
That's
you around
a
that.
ton out there, man. That's for sure.
Okay. I mean, different banks call it different things, but
Yeah.
some banks offer that where you can roll in some improvements. Uh, let's see. Let's talk about what would you like to talk about that I haven't covered?
I think we covered a good amount of info. I mean, we talked about some down payment assistance programs out there. We talked about some of these 203K loans out there. We talked a little bit about as far as where interest rates are heading, and definitely, I mean, the purchasing power with this interest rates changing, something to look into. I cannot say it enough. If you were pre-approved early in the month, early in the year, even in the month, yeah, or early in the year, and you just sat around and are still in that search, waiting for the perfect home, you might want to give your lender a call tomorrow and revisit to see where you're stand now, especially with the change in the rates.
I agree. I've been saying that over and over to folks because
Yeah,
if your payment has changed by $500,
it's a big difference,
you
man.
can afford the same thing that you could a couple of months ago.
Yeah. Oh yeah. Now you might have to look at paying down some debt to still qualify for that 400,000 or so forth. You might have that auto loan where the payment is 500. Now you might need to pay down that loan significantly or sell it or something to still achieve the dream of homeownership. But it's definitely doable. Uh, I do get a lot of individuals that seem to be discouraged with the changing rates, but never be discouraged. Just stop and think, okay, I'm renting, I'm paying 100%, it's 6%, 5%, definitely seems like a bargain.
Okay. Now you brought up something, the renting where you're paying actually 100%. One of the biggest things that I've noticed that people are coming to me lately is like, I got to get a house because my rent's going up $560. Have you started to see a lot of that where people are trying to get a loan because their rent's going up $500?
Yeah, and the biggest thing is that I'm seeing it is we're waiting till the last minute. It's like, hey Joe, my lease ends at the end of April. Can you help me out? It's April 20th. I'm like, I can definitely help you out, but let's sit down and talk because you might have to go on a month-to-month basis until we get you that home. But I've seen where payments have gone up quite a bit. And I asked some folks, I'm like, okay, you're paying how much for rent? Well, and that's about a $350,000 home that you can be actually owning and building wealth through. And now people are like, well, I don't have the funds. I'm like, okay, well, if you're gonna go rent, you're gonna pay quite a couple thousand because nowadays they ask for almost perfect credit. It seems like, and based on feedback that I'm getting, they're asking for pretty strict credit requirements, and you gotta have some assets, put down some good amount of money for your first and last month, plus security deposit, and all these things just accumulate. When if you compare them to that of buying a home, they're very, very similar. And my advice to everybody, whether you're watching or hearing this, is if you're a tenant and you're even just thinking about buying a home, you definitely want to get in touch with us. The sooner the better. If your lease is not up till, I don't know, end of, let's say next year's April, well, get in touch with us now. If you're ready to go, perfect. If for whatever reason you're not, we can definitely help and advise you, whether it be with the credit wise. We can help you out with in regards with credit or whatever needs to do so that we can help you out down the road. Nothing hurts, completely free of charge to see where you stand when it comes to buying a home.
Cool. Well, I am going to let folks ask any questions they want. Maybe they're formulating them now, and I'll go into what I do every week where I'll go over the market and we'll see what's going on. And that way, while you guys think of that, let's just talk about the market for just a second. Hopefully, Joel can stick around for a moment if anyone
Yeah,
has
of
any
course, of course.
questions. So, what I've done here is I've already set it up for everything that's happened so far this month. And let's start looking at what's going on with the single family homes. So, we're going to go in here, just look at our stats real quick. So, for the single family homes, the cheapest one sold for $99,999. Our average right now is 589, 895, and our median is 475, which of course has gone up again. Let's do the same thing. Let's go back here and take a quick look at what's going on with the condos and townhomes. So look at the condos. Okay, for condos, cheapest one that sold this month so far, $70,000. I don't. Let's not talk about the max. They got plenty of money. They're not looking at this. Average was 257,409. The median 242,000. Let's go ahead and take a quick look at the townhomes. So I got a little more efficient this week, fellas. Got to figure out I did not have to actually check everything. So the cheapest townhome sold for 130. The average was 353, 810, and the median of 34500. That's here for Las Vegas, North Las Vegas, and Henderson. And this week we're not going to go in and look into everything. I don't want to keep Joel for too long. That way you at least know what the numbers are and where they were the last time, and especially at the end of March. You can already see that in the end of April, if things continue with this trend and we only have a few days left, it's not going to be pretty. So as you saw, just for single family homes alone, we're up to 475,000, which is significantly more than the median and average in the United States now. So we've gone from one of the cheapest markets to one of the most expensive. So thank good. We used to have this saying back in Alabama, thank God for Mississippi. Now we can say thank God for California. Okay, y'all.
Uh, yeah,
Glad
it's
you
just getting
engaged
interesting,
in
man.
the question. You have any parting shots, Joel?
No, man, I think that's it, you know, and I like it's interesting when we talk about California and everybody that's moving out here. It's like, you know, I mean, California is expensive. They come out here, they still find it a bargain. But as I have lived here in Vegas for quite a while, we're still like, oh, it's inexpensive, you know. But it's you can't sit around and wait any longer, you know. Thinking about doing it, now is the time. If not now, then when?
Okay, cool. I guess that's pretty much wraps us up for today, with the exception of we know that you work for Guaranteed Rate Mortgage. I'll put it down in the comments if you want me to. It's up to you.
Yeah, go
Your
for it, please.
contact information. If you want to shout out your phone number for someone to call you, you can. And if you want me to, I'll put it in the comments so people can see it later.
Yeah, definitely. For anybody that has any questions by any means in regards to the mortgage getting pre-approved or simply want to go ahead and chat, give me a call 702-419-5363. Any questions in regards to the mortgage industry, feel free to reach out.
Okay. And I should mention also, I do believe you speak Spanish, right?
I do, yeah, bilingual. So if you do have Spanish speaking clients, they are going to be speaking to me directly, not to an assistant or to a translator. No, I am fluent in both English and Spanish. So any bilingual
Excellent.
folks out there, I can help out.
Okay. And also, I do believe you have a site. If you want me, I'll put it on the in the comments below where someone can go there and apply directly online for a loan. Correct?
Yeah, correct. So we'll put it here in the comments as well. But anybody that wants to go ahead and submit a application, feel free to do so. We'll put it in the comments, the link, but it's just rate.com/ and then my full name. And that takes you straight to my online portal where you can simply submit the application. And then once you go ahead and hit submit, within a matter of a couple hours, they give you a call and go over your options.
Okay. Well, Joel, it was a pleasure to have you here this week. I am surprised nobody's asked any questions by now. I normally have a full screen of questions, but maybe you've mesmerized them all so much. So,
Either that or they're going to call you once we went to the store, they're gonna be like, "Hey, Eric, hold on. What did he say? Can you just have him give me a call, please?" Yeah.
and I hope you'll come back in the future because I would love to have maybe once or twice a month to have you on just so we can start discussing this because this interest rate, it's more important than the increase in prices because the increase in prices over the last few months only added, like if the interest rates were still the same, would have added like $200 a month to your payment. But
Yeah.
without that, if we were just where we started at in January with the change in interest rates, we've already discussed that it's $500. So you add the two together, you're paying 750, $800 more.
Yeah.
So
It's
the interest
gonna
rates
keep
really are right now more important than the price of the house.
exactly. So lock it in now. Worry about refinancing down the road. Even if you refinance to get the payment lower down the road, continue making the payment that you're making now and pay off the home much quicker. Definitely
Okay.
build wealth.
Okay. Well, looks like everybody's had their piece. Nobody's asked any questions that I need to answer. So, like I said again, I would love to have you back on,
Yeah.
especially when we got all those lending questions that need to be asked.
Yeah,
So,
yeah.
with
Any
that,
lending questions?
go ahead.
Yeah, anybody that has any lending questions, I can definitely help out as well. And yeah, Eric,
Okay.
anything you need, man, just let me know. And thanks for having me on here once again. And hopefully everybody enjoys the rest of their weekend. Truly a pleasure, man. Thank you.
Okay. Thank you so much, Joel. And I will see you around the farm. And everybody else, if you have any questions, like I said, we're going to put all of his information below. Reach out. Joel is a really great guy. I'm serious. No one has ever came back saying anything about negative about Joel. And when it comes to like the VA loans, I do a lot of VA. Anything I send to Joel has closed. Not only that, the when I look at his rates compared to others, when someone come to me with a loan, they're paying thousands of dollars less. So I just want to put that plug in for Joel. Okay.
Thanks, man. Appreciate it.
Yeah. So with that, we are going to end this broadcast. And if you're watching the restream on this and you believe we've given you a little bit of good information today and you haven't hit that subscribe button, go ahead and hit the like button, and leave us a comment. And if it's a lending comment, I'll pass it on to Joel so he can answer it for you. Okay.
Awesome.
Everybody
Thanks,
later
guys.
now.
All right.